I cannot believe you guys are sleeping on investing on gold. Hey, savvy investors. Today we're diving into the world of gold investment, and I've got some exciting insights to share with you. Let's kick things off with a jaw-dropping fact. Did you know that gold prices have soared over the past decade, outperforming many traditional investments? It's time to consider gold as a lucrative option for your portfolio. Gold has been a valuable and sought-after asset for centuries, revered for its beauty, rarity, and intrinsic value. As we navigate the financial landscape of 2024, investing in gold remains a prudent strategy for diversifying portfolios and hedging against economic uncertainties. This ultimate guide will equip you with the knowledge and strategies to invest in gold like a pro. Understanding the basics of gold investment. 1.1. Why invest in gold? Hedge against inflation. Gold often retains its value even when the purchasing power of currency declines. Safe haven asset. In times of economic instability, gold is considered a safe investment. Portfolio diversification. Gold provides diversification, reducing overall investment risk. Liquidity. Gold is a highly liquid asset easily bought and sold in markets worldwide. 1.2 Forms of gold investment. Physical gold includes gold bullion, coins, and jewelry. Gold ETFs and mutual funds offer exposure to gold prices without the need to store physical gold. Gold mining stocks, shares in companies that mine and produce gold. Gold futures and options, contracts that allow you to buy or sell gold at a future date at a predetermined price. 2. Investing in physical gold. 2.1 Gold bullion bars and ingots, available in various sizes from grams to kilograms. Storage requires secure storage solutions such as a safe deposit box or home safe. Purity. Ensure the gold is of high purity, 99.5% or higher. 2.2 Gold coins, popular coins, American gold eagles, Canadian gold maple leafs, South African Krugerrands. Collectible coins may have additional value due to rarity and condition. Authentication. Buy from reputable dealers to ensure authenticity. 2.3 Gold jewelry investment grade. Focus on pieces with high gold content and minimal craftsmanship premium. Wearable wealth. Jewelry combines aesthetic appeal with investment value. Market value. Typically, gold jewelry has a lower resale value compared to bullion and coins due to craftsmanship costs. 3. Investing in gold ETFs and mutual funds. 3.1 Gold ETFs. What they are: exchange-traded funds that track the price of gold. Advantages: easy to buy and sell, low management fees, no need for physical storage. Popular gold ETFs: SPDR Gold Shares GLD, iShares Gold Trust IAU. 3.2 Gold mutual funds fund composition. Invest in a variety of gold-related assets, including physical gold and mining stocks. Diversification. Provide broader exposure to the gold market. Performance. Check past performance and management fees before investing. 4. Investing in gold mining stocks. 4.1 Gold mining companies. Major players: Barrick Gold, Newmont Corporation, AngloGold Ashanti. Stock volatility. Gold mining stocks can be more volatile than physical gold prices. Company health. Assess the financial health and operational efficiency of the mining company. 4.2 Gold royalty and streaming companies. Business model: provide upfront capital to mining companies in exchange for a percentage of future production or revenue. Examples: Franco-Nevada, Royal Gold, Wheaton Precious Metals. Risk and reward: generally less risky than investing directly in mining companies. 5. Investing in gold futures and options. 5.1 Gold futures. What they are: contracts to buy or sell gold at a future date at a predetermined price. Leverage: offer high leverage, allowing for large positions with a smaller initial investment. Risk: highly speculative and not suitable for all investors due to the potential for significant losses. 5.2 Gold options. Call and put options. Contracts that give the right, but not the obligation, to buy, call, or sell put gold at a specific price before a certain date. Hedging and speculation: used for hedging existing positions or speculating on gold price movements. Complexity: require a thorough understanding of options trading strategies. 6. Strategies for investing in gold. 6.1 Dollar cost averaging. Consistent investment. Invest a fixed amount in gold at regular intervals. Reduce risk. Mitigates the risk of market timing by spreading out purchases over time. 6.2 Buy and hold long-term strategy. Purchase gold and hold it for an extended period. Capital appreciation. benefit from long-term price appreciation. 6.3 Tactical allocation. Adjust based on market conditions. Increase or decrease gold allocation based on economic outlook and market conditions. Active management requires regular market analysis and adjustments. 7. Risks and considerations. 7.1 Market risk. Price fluctuations. Gold prices can be volatile, influenced by global economic conditions, currency values, and investor sentiment. 7.2 Storage and insurance. Physical gold requires secure storage and may incur additional costs for insurance and security. Counterparty risk. ETFs and mutual funds involve counterparty risk, where the financial stability of the issuing institution matters. 7.3 Regulatory and tax considerations. Taxes. Understand the tax implications of gold investments in your jurisdiction. Regulations. Stay informed about regulatory changes that could impact gold investments. 8. Choosing the right investment platform. 8.1 Online brokers. Reputation. Choose reputable online brokers with a history of reliability and good customer service. Fees. Compare fees for buying, selling, and holding gold investments. 8.2 Precious metals dealers. Reputable dealers. Buy from dealers with a good reputation and verified customer reviews. Verification. Ensure the authenticity and purity of the gold you purchase. 8.3 Financial advisors. Professional advice. Consult with financial advisors specializing in precious metals for personalized investment strategies. Comprehensive planning. Integrate gold investments into your overall financial plan. 9. Keeping up with market trends. 9.1 Economic indicators. Monitor. Keep an eye on economic indicators such as inflation rates, interest rates, and currency values. Impact. Understand how these indicators affect gold prices. 9.2 Market news and analysis. Stay informed. Follow financial news and expert analysis on the gold market. Adapt strategies. Be ready to adapt your investment strategies based on market developments. 9.3 Gold price charts and technical analysis. Price trends. Use gold price charts to identify trends and potential entry or exit points. Technical indicators. Employ technical analysis tools like moving averages, RSI, and MACD to inform your decisions. In conclusion, investing in gold can be a rewarding strategy for achieving financial security and diversifying your portfolio. By understanding the various forms of gold investment, employing effective strategies, and staying informed about market trends, you can invest in gold like a pro in 2024. Remember to assess your risk tolerance, set clear goals, and seek professional advice when needed. With a well-thought-out plan and disciplined approach, gold can be a valuable component of your investment portfolio. If you find this video valuable, don't forget to hit the like button and share it with your friends. Subscribe to the channel for more wealth-building tips and tricks. Also, check out any of these 2 videos on financial independence and wealth creation, and watch one of them to stay on top of your money game. Thanks for watching, and see you in the next video.